This is the Model C Sentinel daily dose for the pre-market of Tuesday, March 17th, 2026. System identity. The Model C Sentinel version 16.4 dashboard is online. Precision protocols are active. Disclaimer. This briefing is for educational and informational purposes only. It is not financial advice. Tactical orders are generated by a quantitative model. Current status. No entry elevated VIX. Engine block. Entries frozen. Section 1. Vital signs. First, the smoothed volatility Z-score. Yesterday, the daily volatility compressed significantly. Our smooth vol Z dropped sharply from 0.58 down to 0.36. Second, the VIX. The fear gauge cooled off, dropping from the 27 level to close at 23.51. Third, liquidity. Despite the market bounce, the tide ratio remains perfectly flat and decaying at 0.85. Internal breadth is completely stagnant. Fourth, the bear probability score. Internal systemic risk remains steady at 45%, holding at transitional stress. Section 2. The forensic analysis. Yesterday, the market rallied. The QQQ bounced, the VIX crashed downward, and across the internet, discretionary traders declared that the bottom was officially in. They rushed back in to buy the dip. But look closely at your version 16.4 dashboard. The status banner did not turn green. Instead, the system threw a massive red flag, elevated VIX, engine block. Why did the algorithm lock the buy button on a green day? Because of structural market stress. The Sentinel does not just look at the last 24 hours of price action, it measures historical context. Yes, the VIX dropped to 23.51, but the system's core engine recognizes that a 23 reading still places the VIX in the 80th historical percentile. Volatility is still fundamentally toxic. Furthermore, the algorithm cross-referenced this elevated VIX with our tide ratio, which is completely failing at 0.85. Because the index is bouncing while the internal stocks are still bleeding, the core engine's is_bullish flag is mathematically locked to false. The system has statistically classified yesterday's price action not as a structural bottom, but as a classic bear market rally. Section 3. Tactical command. The tactical command on the dashboard is absolute. Structural stress detected. Entries blocked. Max positions 0. Number 1. The engine block. The core algorithmic engine has disabled all buying. We do not negotiate with the math. Number 2. Do not trust the bounce. A dropping VIX means nothing if the tide ratio is decaying. This is a trap designed to lure retail capital back into the wood chipper. Number 3. 100% cash preservation. Your capital remains perfectly shielded in cash. Let the market makers run their traps. We will wait for true structural healing before deploying a single dollar. End of briefing.